When the Indo-US trade deal was announced on 3rd of February, the index opened gap up and hit an all-time high almost of 26,341. From then on, the sell-off has resulted in a loss of 2,600 points. This is what Ms. Rajani is pointing out, that a 10% correction has happened, and this is the kind of volatility that you should expect. Now the problem is that this 10% correction happened over 34 days, and that's the pain, that it has climbed on a staircase but come down on an escalator, and that is creating a lot of pain not only in Nifty holders, large cap equity diversified funds, but small caps and mid caps have been trashed beyond belief. Shweta, the issue here is, what should investors who chose in hindsight only mid-cap funds and small-cap funds are now facing a lot of pain. In the same duration, the mid-cap and the small-cap funds have fallen very, very sharply. How do you handhold their pain, and what do you advise to them?
Sure. So two things here. One, I think the basic principle of diversification works everywhere, and one should not build their portfolios basis what I would call as recency bias. So if you've seen mid-small performance being well over the last few years, don't go overweight that market cap space. It happens not just with market cap allocations, it happens with asset classes, it happens with sectoral allocations as well. So which is where when you're constructing your portfolio, however good the numbers may look for mid-small, I think it's always good to maintain a balanced portfolio between large cap, mid cap, and small cap. Like even in the best case scenario, having a 50% large cap in your portfolio will help you in situations like this. If you've not done that, I think today is the opportunity for you to build your large cap portion and balance out the risk that you've taken in the portfolio. Now that you already have it, that's the second point. If you look at it from fundamental standpoint, with the earnings season now gone by, you have 9 months data. Actually, if you see, the earnings for mid-cap companies have been held steady. Small cap also in pockets, we've seen good amount of earnings coming in fact, better than large cap earnings coming in. Of course, we've seen a significant correction, which does happen when your sentiments are down, especially in war-like situation. Mid and small caps also get the most amount of beating. But one data point I want to show you, in fact, talk to you about is, if you look at it in the last few days also, the numbers are showing that small cap funds are still receiving net positive flows. In fact, just some data I was seeing for few funds, talking to certain fund houses, we were seeing small cap funds are receiving net flows. What this tells us is that the retail investor is playing very smartly and building on the small cap positions. The domestic sentiments is not necessarily bad. They are looking at fundamentals and smartly building their portfolio. And with the mean reversion playing out, fundamentals intact for mid and small cap, if it's your long-term position, then you need not be so worried. Just have a balanced portfolio would be my take here.
If you like the video, do like, comment, share and subscribe.